Hey everyone, Eric Dutram here, the editor of your ETF Investor service, coming to you with the latest update on what's been happening in the portfolio and a little bit more information about some of the newer picks that we've added to the service. Now, the first thing I want to do was talk about two of the new funds that were recently added. We have EZU and EWW, and both of those are very foreign focused, EZU being a Eurocentric fund and EWW being a Mexico ETF. Now, the key thing to note about both of these products is they were added largely, well, at least partially because of the dollar weakness as of late, and we can see that trend in this chart I have on the screen for you right now. As you can see, and this is a chart of UUP over the last year, and it focuses in on the dollar against a number of currencies. The dollar was strengthening right after the election, and we saw a nice move for the dollar heading into 2017, but as of late, things have really been pretty bad for the dollar against a number of currencies. And we've seen severe weakness as of late. And actually, the currency, as compared to a number of other developed market currencies, is actually lower at any point than it's been in the past year. So basically, we've seen a huge move in the dollar, and that's really making a lot of foreign investments, especially those that aren't hedged, very popular. And that's one of the key reasons why I added both EZU and EWW to the portfolio. Now, let's take a quick look at some of the holdings on both these just to give you a better picture of what it goes into some of these funds. Right now, we're going to look at the Eurozone fund here real quick. As you can see, we have a lot of financial exposure, and this is going to be helped out by a overall trend in more positive banking situations over in Europe. Industrials and consumer discretionary make up the other two of the top three holdings. And then from a geographic perspective, this is also important to note, France and Germany make up a sizable portion of the portfolio. And as you can see on this top list, there's no exposure to countries like Switzerland, the UK, or really anyone that isn't on the euro currency. So it's a bet just on euro-backed nations. So we don't have to worry about Brexit issues as much or any other currencies, be it in Poland or anywhere else on the continent. So that's definitely a key aspect to note. Let's take a quick look at Mexico as well. You might be surprised to note that consumer staples actually makes up the top portion here. Roughly 25% of the portfolio, followed by financials and materials. And I think this is important to note just because consumer staples is generally a safer area, and I know a lot of investors probably still have some concerns about Mexico, given the ongoing disputes and whatnot between the various governments. But it is a very consumer-centric fund, and I think that's going to be good news, especially if the peso continues to strengthen here against the U.S. dollar. So that's definitely something to keep in mind as we stretch into the tail half of 2017. Now, let's also take a look at some of the notable funds that we had in the portfolio over the past couple months here. And I want to start off by talking about SOXX, and that's actually been one of the top performers in the portfolio since we've really had it in there. And over the last 3 months, we can see in the chart, it's definitely beaten out the S&P 500, 10% compared to an S&P 500 of gain of about 4.3%. And as you can also see on this chart right here, a primary reason for this level of outperformance has been the astounding gain in NVIDIA, which is actually the top holding in SOXX right now, roughly about 10% of the total portfolio. The stock's gone up about 60% in just the last 3 months, so that definitely helps to drive the total return of the fund here. Now, there are a lot of earnings reports coming up here in the next couple weeks and stretching into August, and that's going to really determine how much longer we're going to stay in this fund and if it's going to continue moving higher. Some of the sector and industry ranks have come down a little bit for this area, so I do have some concern, but we'll see how things progress as we finish up the summer and we move on into the tail end of the year. Now, let's also look at a disappointment for the ETF Investor service as of late, and that was with the Pakistan ETF. Things were looking pretty promising for Pakistan, as we can see in the chart right here. The ETF was moving up nicely, and it had this period of consolidation. We got in this area right around here. We saw a nice move up in the fund as the country was added to emerging market baskets. So that was definitely a very good positive. Things were looking very promising. And then there was a huge political issue of corruption being charged at various political figures at basically the top of the Pakistani food chain. And as we can see in the chart, this had a real negative impact on the fund in a very short period of time. Pakistani stocks actually went down about 5% in a single day after the corruption revelations came out. So, you know, we kind of had to get out of this one because of that issue. I still think Pakistan has a lot of promise from a longer-term perspective, but the volatility and the overhanging corruption issues are definitely going to be issues for this fund and the country in the near term. Well, that's really all the time we have for today. Tune in next time, probably in a couple months, for the next update. And until then, make sure to read up on each and every ETF investor service. For Zacks.com, I'm Eric Dutram.